If wealth were really about effort, the richest people would be the most exhausted. They're not. Some of them make more in a day than others do in a lifetime, without working more hours, without taking on more stress. So either the story we've been told is incomplete, or something else is doing the heavy lifting. Because this pattern isn't rare anymore. It's everywhere. Asset prices keep climbing. Housing feels further away. Markets hit highs while wages move slowly. And the gap keeps widening. Not dramatically, not all at once, but consistently. So the real question isn't, why are some people rich? It's, why does the gap keep growing, even when the rules seem the same? Let's start with something simple. There are two ways money grows. You can earn it, or you can own something that grows. Earning is tied to time. Ownership isn't. You work an hour, you get paid for that hour. That's a straight line. But when you own assets, something different happens. They move, whether you're working or not. A stock doesn't care if you're asleep. A property doesn't pause because you took a day off. And over time, that difference compounds. Not in a dramatic way at first, but quietly, which is exactly why it's missed. Imagine two people. One earns steadily and saves part of their income. The other owns assets that grow by a small percentage each year. In the beginning, they look similar. Then something subtle happens. The person earning is adding. The person owning is multiplying. And addition can't keep up with multiplication. That's the first layer. But it's not the full story. Because if it were just about owning assets, more people would catch up eventually. They don't. Which means something else is shaping the outcome. Now look at the environment those assets exist in. Interest rates drop. Money becomes cheaper to borrow. And when money is cheap, more of it flows into assets. Not into savings accounts. Not into wages. Into assets. Stocks. Real estate. Financial instruments most people don't interact with daily. And when demand increases, prices rise. That part is simple. But here's what's less obvious. The people who already own those assets benefit first. They don't need to react. They're already there. So when the system pushes asset prices up, their wealth increases automatically. No extra effort required. Now think about the other side. If you don't own those assets yet, you're entering after prices have moved. You're buying higher, taking on more risk, for a smaller relative gain. So even if you follow the same steps, the outcome isn't the same. Timing changes everything. Then there's access. Not everyone can borrow money the same way. Some can borrow large amounts, at very low interest. Others face high rates, or no access at all. That difference sounds technical. It's not. It determines who gets to scale, and who stays limited. Because borrowed money, when used to buy assets, amplifies returns. If the asset rises, the gain is multiplied. If it falls, the loss is multiplied too. But here's the part that's almost ironic. The people with the safest financial positions often get the cheapest access to risk, and the people with the least margin for error pay the highest price for it. So the system quietly flips risk and reward. And most people never notice. Now add time into the equation. Because compounding isn't just about growth. It's about duration. The longer you're in the system, the more powerful it becomes. Early ownership matters. Not just because of starting sooner, but because you experience more cycles, more upswings, more periods where the system favors asset growth. Each cycle builds on the last. So someone who started earlier isn't just ahead. They're accelerating. And acceleration is hard to catch, even if someone else works harder later. Now let's look at behavior. Because the system doesn't just move money, it shapes decisions. When asset prices rise, owners feel more confident. They invest more. They take calculated risks. They expand. That pushes prices even higher. Meanwhile, those outside the system see rising prices and hesitate. It feels expensive. It feels late. So they wait. Or they enter at the peak, when momentum is already slowing. So one group is reinforced by confidence. The other, held back by caution. Same market. Different outcomes. Now step back. Because this isn't about individuals making better choices. It's about a structure. A system that rewards ownership, timing, access, and duration. All at once. And when those factors align, wealth doesn't just grow. It accelerates. That's why the phrase "the rich get richer" feels simple. But what's happening underneath isn't. It's layered, systematic, and, in many ways, predictable. Here's where the public narrative drifts away from reality. You'll hear, "Just work harder. Be disciplined. Invest consistently." And again, none of that is wrong. But it assumes everyone starts from the same position. They don't. Some start with access to assets. Others start with only income. Some benefit from rising markets early. Others arrive after prices have already adjusted. So the same advice produces different results. Not because of effort, but because of position. Now look at the long-term picture. If asset prices continue rising faster than wages, ownership becomes harder to reach. Entry gets delayed. And delayed entry reduces the power of compounding. So the system reinforces itself. Those inside keep gaining. Those outside find it harder to enter. Not impossible, but harder. And over time, that difference builds. Quietly. Until it becomes visible enough that people start asking questions. But by then, the gap isn't just about money. It's about time. Time spent compounding. Time spent positioned inside the system. And time can't be reversed. So the real mechanism isn't a secret formula. It's a combination. Ownership, timing, access, and duration. All moving together. All reinforcing each other. And none of them evenly distributed. Which leads to a slightly uncomfortable conclusion. The system doesn't need to be unfair to produce unequal outcomes. It just needs to run consistently. So when you hear that the rich keep getting richer, it's not just a phrase. It's a process. A process that operates in the background, whether people notice it or not. And once you understand that process, you stop asking why them, and start asking something else. Where exactly do you stand inside it? Because in a system like this, being a little early can eventually look like being impossibly far ahead.